I'm just going to offer a few conclusions to the event. One of the aims, well, the real aim of the Investor Day that we put on days like today is to help our investors and to allow you to get under the skin of the VCTs and what we do. And we do that by offering some extra analysis of the portfolios, as Doug's done earlier, by introducing you to some portfolio companies. And those of you who've been to a number of the events before will remember that the last time we were in the theatre here, which was for our very first event at the Guildhall, we had both Quicksand and Frontier Developments presenting, both of which were quite small holdings in the fund at the time, and both of which have become two of the most successful holdings in the VCTs. And Doug's already talked about Quicksand. Frontier Development, likewise, for those of you who remember it, the space game called Elite Dangerous was what they were developing when they raised money from us, has also done exceptionally well and is now a significant, really significant holding in the top 10. So, we hope this is allowing you just to get a little bit closer to what we do. I'd like to go in two further directions along that line of giving you a little bit more insight. The first one is to just talk about the evolution of the portfolios. And I suppose what I'm really getting at here is I think in many ways the VCTs have passed an inflection point, which is quite important. It's also quite hard to describe. I'm going to try and illustrate it with, go through these, with what I call the bubble graphs. So those, you may remember these bubble graphs that we produce. And first of all, we're going to go back, rewind the clock about, how many years is this? Well, this goes back to 2012, so rewinding the clock 5 years and having a look at the portfolio in Amati VCT as it was back then. And this is how it looks. So on this graph, on the left-hand axis, you'll see the market capitalization, and it starts at 0, goes up to 500 million. And you can see most, as you'd expect, most of the holdings in the portfolio are squashed quite near the bottom. And the size of the bubble is showing you the weighting of the holding. So it's relative to the weighting in the portfolio. And along the bottom axis is the year of investment when we first made an investment in that company. So you can see our oldest investment here goes back to 2002. That would be Sprue Aegis, which actually was bought on OFX, which David mentioned earlier. And then we've labelled some of them here so you can see what they are. And I just want to show you what happens as we wind the clock forwards with these bubbles. So this is 2012. If we jump forwards to 2015, you'll start to see the bubbles kind of bubble up a little bit through the market cap spectrum. The portfolio is changing a little bit. If we go forwards to 1 year ago, 2016, you'll see some of these large holdings. Of course, the bubbles get larger as they rise because that means the companies are going up in value, and the weighting in the portfolio then also rises, unless we start selling shares. And in most cases, we're very reluctant to do that. And if we wind on to how this looks at the end of the year we've just reported, 2017, it looks like this. And you can just get the sense of how the portfolio has evolved over that 5-year period by watching the progression of those bubbles. In case you missed it, I'll just go through this for Amati VCT2 again, and you'll see the same sort of effect. That's how it looked in 2012. And there's one outlier here, Synergy Healthcare, which at this point had already become a full list company. So we knew we only had a limited amount of time we could hold that, after which it would become non-qualifying. That's why that one doesn't stay in the portfolio. You'll see Accesso down there, already quite a big holding, but very small. And then as we wind the clock forwards, you'll just start to get the sense of how dramatically things have changed over the last year and how much of the portfolio has risen above £100 million in market cap. And in a way that changes the character of what we're dealing with a good deal, and is one of the great strengths, if you like, of the Amati VCTs. And I should say that this has taken 12 years to produce where we are today. This has been a long time in the making, both in terms of patient investing, but in terms also of the way the strategy has evolved. And as the strategy has evolved, I'd say I just want to, as a sort of second strand here of taking it a little bit deeper into the portfolios, say that our thinking has evolved with it. And this is very much something that the two boards of both of these VCTs have been involved with us in shaping, and they played a really significant part in helping us to arrive at the strategy that we have pursued. But as we've been doing this a long time, and in some ways, I think as your investment philosophy evolves, it also gets a little bit simpler. And where we've got to now is actually a relatively simple position that I can sort of maybe summarize in 3 key aspirations of what we are trying to achieve here. So the first one is, we're looking to make long-term investments in outstanding AIM-quoted growth companies. And this means that when we invest in a company, we're asking hard questions about whether it has the necessary ingredients of competitive advantage, barriers to entry, industry domain expertise, and so on, to prosper over the long term. The second point is that we want to invest in a company at the point where there's enough evidence to convince us that the forecast growth is not just numbers on a page. And this means we need to be persistent and diligent in our research and inquiries. And we need to bring our collective experience fully to bear in exercising judgment. And the third point is that we want to back companies that make a positive contribution to the world which they inhabit, run by people that we trust and respect. This means one of the questions we ask is, if this business didn't exist, would anybody miss it? We consider whether a business works for or against its customers, or its staff, or its suppliers. We consider the character of the people that we invest with and deal with. So these aspirations, if you like, can be summarized by 3 key sort of short phrases: long-term, rigorous research, and ethically responsible. I mentioned just briefly the boards and the work they've done with us. And I always think it's easy when when looking at products like this to focus on the manager and the investments and so on. But actually, the boards play a very significant role pretty quietly in the background. And between the 2 boards that we have, there's a huge amount of business, legal, investment, accounting experience. And that really does play a profound role in the success of the companies. So if you like, I'd really like to underline the tribute that we pay to the boards. And I know that there is a requirement actually not for VCTs, but in investment trusts, that the issue of longevity is one that gets looked at. Actually, from where I'm sitting, longevity is a real asset. And it's worth, in some senses, pitching the counter-argument that VCTs are highly technical, the legislation is very difficult, it's changing all the time. The accounting world that VCTs have to comply with is similar, it's changing frequently. But clearly, we also have to be mindful of the fact that boards need to be independent of us. We don't have a representative on the board, and we've never sought to do that. And I can offer my assurance that the boards are rigorous in the way they hold us to account, and I certainly regard them as fully independent. Equally, we mentioned this briefly earlier as well, Amati itself has grown significantly, and Doug and I and David, who's the third fund manager, have a fabulous team of people behind us who make what we do possible. And you may notice, for example, our website, I think, really offers a lot more content than many funds do in terms of the knowledge and information that we're able to convey to you. If you look on our website, you can see the latest published NAV, you can see the share price for all our funds, you can see performance graphs. That's reflective, really, of the, I would say, of the outstanding quality of team that we've got behind us. And also, in putting on today's events like today, that's a great team effort. Rachel, who many of you will have dealt with, has had a huge amount to do with this and put in a huge amount of hard work. So I'd like to offer my thanks to Rachel for that. To sum up, I'd say I've reached a point where the VCTs have reached a point where I feel immensely proud of where they've got to and what we've been able to create with them. And I also feel very optimistic about what both the VCTs can achieve in the future. So on that note, I'd like to welcome you to leave some feedback for us. We really do value your thoughts, and we take notice of what you say to us. And I'd urge you to stay on for the Creative Entrepreneurs Award that happens after the break. And I look forward to chatting to you more over coffee. So thank you very much for coming to this session.